Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what hedge funds and big players in the market are doing. So essentially the hedge funds and anyway the non-commercials in the market, so big speculators that are in the market from an institutional perspective to profit. And by the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. If you're new to the channel, make sure to subscribe. This is the place to be for high quality, free trading education. Now, without further ado, let's jump straight onto the charts. Now, starting here from the monthly time frame, what we can see is that at the moment, the market is in the impulse and correction phase that is coming after the rejection away from a quite strong historical structure level. In fact, what we can notice is that this level was already acting as previous resistance, preceding all these rejections to the downside. Then the market broke above the zone with this impulse. At that point, all this previous resistance was turned support here. The market tested the previous resistance, turned support, and is currently in the process of rejecting this level to the upside. So from a monthly standpoint, everything seems quite bullish and the market is rejecting strong support to the upside. We can also notice, however, that no market can just go up in a straight line. Every market will have a series of impulses and corrections to be created along the way with the creation of an uptrend, because the corrections give the possibility to new buyers to enter into the market, which at that point can push prices higher. And what we can see here is that we just had, after the rejection to the upside and the creation of the impulse, the start of this correction, and now the market seems to be trying to push to the upside, potentially printing new monthly higher highs. Dropping down on the weekly time frame, what do we see? Now, from a weekly perspective, this level is currently holding as support. Now, if we look closely, we can see that from here, the market created this rejection to the downside, meaning that this level is the previous weekly resistance that after the market broke it to the upside was turned support and has been acting as support already in 3 occasions. And there is a possibility for the market to print this inverted head and shoulders at this level, which is simply the creation first of a higher low, then of a lower low, and then of yet another higher low. Now, after this, there is a possibility of seeing more bullish price action. Now, let's keep all of this in mind and drop down on the daily time frame. Now, from a daily perspective, what we can notice here is that the market seems to be inside of an accumulation area. Now, when you see the market just moving sideways, you always have to pay attention to what is happening from an institutional perspective. Because usually when the market is moving sideways, there is some institutional positioning moving. And that is because when you have a huge order, like is the case with institutions, since in the market, for every buyer, there needs to be a seller, and for every seller, there needs to be a buyer, if at any specific moment there isn't enough liquidity in the market in order for them to buy or to sell, because there is no one taking the counterpart of their trade, so there isn't enough liquidity in the market, usually we start to see a horizontal price action developing, and this could either be an accumulation area or a distribution area. Now, in the case of an accumulation area, it means that institutions are buying. In the case of a distribution area, it means that institutions are selling. Now, in this case, there is a high chance that institutions are buying, considering that the market is in an uptrend. So the only way in which we can get close to verifying this is if we go and see what we have when it comes to the commitment of traders, so what the big players in the market are doing, so essentially the non-commercials, and we look at their orders and how they're moving precisely for gold. Now, what we can see here, in fact, is that with the last reports, net positions have been increasing. We went from having 234.3k net positions up to having 259.7k net positions, showing how institutions have been moving back to the bullish side for gold, with 4,200 2,200 longs added with the last report and 5,100 shorts getting closed, currently bringing the longs to 307k and the shorts only at 47k. So it seems that as institutions are buying aggressively gold, that sideways price action that we have just seen is in fact an accumulation area of longs from an institutional perspective, which increases the probabilities of a potential rejection to the upside away from this level. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you find linked in description, so you never miss new updates. Now back to the analysis. So from a daily perspective, in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. However, when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market at that point, I wouldn't be surprised to see a potential rejection to the upside away from this accumulation area here on the daily time frame. That definitely wouldn't surprise me. Now, all this general analysis, tutorials, and concepts that you see me speak about on my YouTube channel are really just the tip of the iceberg. In fact, if you really want to learn more, I will definitely suggest that you go and check out the transparentfxtrading.com website. Here, you can gain access to all my courses, so 26 plus sessions of courses that go from the very basics of becoming confident with charts to all the way to building automated trading algorithms using the MQL4 language, building portfolios of strategies using quantitative finance tools like the quant analyzer to build and optimize those portfolios of strategies. So a lot of very interesting stuff that you really cannot afford to miss. You also have the possibility to gain access to the trading station software with Telegram notification integrations to really accelerate your learning and your becoming confident with charts. You have the possibility to gain access to one-on-one private mentoring directly with me from your student dashboard, as well as the COT data software. And you also have the possibility as a student, this is only for already members, to gain access completely for free to my MT4 EA's algorithms for free again. And here, in fact, you can see that there is all the presentations of my algorithms. And if you continue to scroll down on the website, you will see that you have the possibility to gain automatically access with the email and password that you will create during the sign-up process. So definitely looking forward to see you on board and see you on your student dashboard. If you enjoyed the video, make sure to drop a like and also let me know in the comments below for any new pairs or topics that you would like me to cover in my next videos. And I will see you in my next breakdown.